Good evening, Wizards, and welcome to episode 28 of the Crypto Wizard podcast. Now, guys, I'm very excited this week. It's Sunday. We are shifting forward to a new week. The trades are unfolding absolutely precisely towards our key levels. We've got XRP hitting key levels. We've got Ether reversing precisely from the zone given. BTC daily candle has closed below $10,000, and Bakkt is launching tomorrow. The sole purpose of this podcast is to go over a bit of the market, understand the market cap right now, understand the BTC dominance, and look a bit deeper into Bakkt and what could be going on right now. Alongside this, I'll be providing many further updates. I'll be providing a video update later as well to keep you guys in the loop. This is a crucial period in the market, and we are starting to see price action actually unfolding to the downside, which could be pushing our projection way further than anticipated. So let's go over this and let's actually break down the short-term implications and the long-term implications of this as well, because I think with all of this unfolding right now, it's so exciting. You guys need to be in the loop as much as possible. So kickstarting with the coin market cap outlook, as always, again, disregarding the overall market cap, we know how weird it can be and we know how inaccurate it can be. But looking at the BTC dominance, we have seen a little bit of a push back above to the 68.2% region. Now, this isn't really anything too significant. It isn't really anything to really worry about right now. I've realized over the past few weeks that the 65 to 70% region is still a pretty good BTC dominance level, where it may have the implications and the abilities to drag the altcoins down with them, but it's also still low enough to actually see the altcoins rally against it as well. It can still cause that inverse correlation around this dominance level, and we've seen it many times over. When the BTC dominance starts to hit around 70% or so, it does start to diminish a little bit, because it seems to be that round number where the altcoins find the inverse correlation and they start to act off their own accord. So it's a nice little good number right now, and we can break that down in the video breakdown later as well. But just wanted to let you know it's a nice little BTC dominance right now, which does also aid the extra confluence of price moving in our favor. BTC overnight, one thing I covered yesterday was if we do see the daily candle close below that zone that I've marked out so well, then what we could be seeing from the following day is the daily candle going back towards that $10,000 to $10,100 region, which it's already done right now, as it's probably been posted in the Telegram as well, as you've seen, and on Twitter. So we've actually broken below this support level yet again, and for the first time ever, we've actually broken through it properly. So what normally happens is when we've been rejecting this region, we've seen the candles go all the way down. I'm talking even from August. The 14th of August and the 15th of August was a great example. We actually saw price break all the way down. This is where we actually caught one of our initial trades. It dropped down to $9,500, but the daily candle closed exactly where the prior daily candle closed, around $10,050. Following on from there onwards, we saw around the 20th of August all the way to around the 27th of August, price action going down to 9,500 again and 9,800. And we saw a lot of price activity within this range around the $9,800 region. And again, every single candle closed exactly where that zone was given. It was only when we broke through and went straight to our next key level, we saw the reversal again. But the biggest telltale sign for me now is the daily candle closures, because if you looked on the 4-hour perspective, when you was seeing that wick fishing lower, then it may have given a slight clue that we may actually be breaking lower ahead of time. But in reality, when the daily candle closes back within that zone, it invalidates everything. But right now, daily candle closed approximately at around $10,000. Now, funny enough, the $10,000 zone isn't the crucial zone. The actual real zone is around $10,050. And now we've broken below, and we've actually rejected it already on the daily candle, and we've even pushed down to around 9,870. Then we are really looking like we could be gearing up for that drop for Bakkt tomorrow. This could even happen tonight. This could even happen early on in the morning. But I do believe now that we are launching tomorrow, we should be seeing a bit of volatility and even some form of giveaway before the actual launch. So there's a big discussion in the market right now. I've just done a little poll on Twitter as well, just before I recorded, just to see how quick the actual feedback would be and what you guys have decided overall. So let's just have a little look and see what everyone is saying right now. Let's see what everyone's theory is. Let's go and see what everyone's saying. So I basically done a poll. I said, will Bakkt go up or will Bakkt go down? And within 9 minutes, we've got 232 votes. 69% of you have voted for down and 31% have voted for up. So it's good to see everyone is starting to, again, we have no guarantee of what's going to happen in the market, and there will never be a guarantee in the market. But it's good to see that everyone is starting to embed into their minds what could actually be occurring. It's not just bullish behavior. It's not just about being a bull, because this market works in phenomenal ways and it does many kinds of trickery movements that can actually catch you out. So it's very promising to see, and it's actually very heartwarming to see how many of you are actually in line and understanding that the market can also go down and not just go up. So gaining that bias as well, I'm very happy to see all of this. I'm looking at Ether as well. We called Ether to reverse from around $224, and we are now back down at $208, exactly where that 78.6 fib was. I warned you guys not to short at $210, and I'll wait for the 225 region to be tapped, which literally taps to absolute perfection. So now we've seen that pullback, it's actually broken through a crucial trend line as well, which failed to hold up. Now that trend line's broken, we could be seeing some Ether activity around $216 again, but right now this is looking like it could absolutely plummet back to the downside. Same goes for XRP. We've actually broken through our crucial trend line, we've rejected this level, and now we are looking to pull potentially back up again to around 30 cents for one final retest. But looking at this now as well, it's all just unfolding back down. Every trade has had zero drawdown. I've given 3 trades out and every single one has plummeted precisely from the zone given. So it's a very interesting scenario right now in the market, and we don't actually know the exact time they're going live yet. This is something we need to look into. But for the time being, we know something big is happening because there's a lot of price activity around this $10,000 region, and it's giving me borderline PTSD, as I tweeted yesterday, of that $6,000 region. Now, remember, this is why I'm a bit more focused on a downside bias, because one thing that's really reminded me that anything can happen in this market is during this region around, I'd say around the 13th of June, 2018 is when we first started seeing that $6,000 met. So after I called the actual all-time high reversal from $20,000 of BTC, I did say BTC would go straight down to $6,000, and we actually slammed that level on the 5th of February 2018 before rocketing all the way back up to $11,500. And what happened from there? The market continued its downward bias and arrived at $6,000 yet again. And from June all the way till November, I think it was around November the 14th, we actually broke through that level. We saw consolidation bouncing back and forth. We even saw movements around $2,500 from $6,000, but we failed to maintain the upside bias. And that's pretty much what is happening now. Although it's a bit more messy, we have seen a very similar movement where we've seen a magnificent growth for 2019. And as you may have seen yesterday, I gave the theory as well that the first 6 months would be fairly bullish. We would see a huge rally. And then once we break that 6-month region and we cross over to the final 6 months of 2019, the market would begin breaking down into a bearish bias and also start consolidating. Now, looking at how $10,000 has been holding up since around, let's just say even July 2019, we did dip a bit lower to $9,300, but overall $10,000 has been the predominant focus up to $11,000. That's been where the real range bound action has been occurring. So when we're putting this all into perspective, we could be seeing at the end of the day, when a support level or a resistance level is tested so many times, it does eventually give way. There's a big misconception in the market that if a support level keeps on holding, it will maintain and bounce. But the truth is, if price remains at a certain level for too long, it does massively increase the odds that price will actually break this level. Because if the level is not strong enough to actually cause a reversal or some form of reversal in the opposing direction, it's very likely weakening time and time again. Every single time we see a retest, it's very likely the buy orders or sell orders at these specific regions are starting to lose their weight. So a good example would be right now at $10,000. There has obviously been a lot of buy orders here because price has truly failed to break above. But what's happening right now after seeing, let's just, even on a daily perspective or a weekly perspective, let's go to the weekly, have a quick look here. 1, 2, 3, 4, 5, 6. So around 6 weeks altogether, we have been range bound within this zone. So just over a month and a half, we've seen a lot of price action here. And with every single retest, you can, if you actually envision it as if people are buying and selling around this region, because remember, the market is based on buyers and sellers. every single time we tap this level, it's very likely buyers are starting to get out of the market because they're identifying the potential faults with this level, and it may not be as strong as many of us believed. Now, by all means necessary, the $6,000 region, that is a worst case scenario prediction, and that is something that's just laid out there. If we do actually see a very severe drop to the downside, it's more of a warning for all of you that if we do see a drop, we'll be hitting around $6,000, and then we should be seeing a reversal from there. In the beginning of the year, before we actually started achieving $14,000, it was more likely if we actually even only stayed to around $10,000, then BTC could have very easily fallen down to $3,000 or even $2,000. Now that we've seen such a large movement, that's not looking as likely anymore. But if you look on this daily time frame and even the weekly time frame, we have really been lacking any real growth or any real large movement since around the 12th of August. So now we're shifting over. It's the 22nd of September. We haven't really seen much movement, but we did see on the 19th of September, just 3 days ago, a very large drop down to $9,650 before closing back at that level again. That huge wick for me kind of gave a big giveaway that the market wouldn't actually be reversing from this level. It was almost like a final call before Bakkt. And psychologically, when you understand how CME futures has been the predominant focus and market mover since 2017, 2018, you have to understand that trickery is going to be occurring around this region. So by all means necessary, we could still blow through the upside. We will recalculate and we will continue with the upside bias. The beauty is right now, every single trade is running in profit. Stop losses should also be in profit. So in the event we did have a phenomenal breakout to the upside, your stops would be closed in profit. We would await a retest of around $10,000 and then capture long opportunities. So it's a win-win scenario for every single wizard right now. And that is why I'm so confident that no matter what happens, we will end up 2019 a winner. Every single call, if you go through the win rate, again, as I posted in Telegram yesterday, we have seen around 95% and maybe even higher since the beginning of CryptoWZRD for the call accuracy. So no matter what happens now, guys, at the end of the day, you have ended 2019 if you followed the principles as a winner. So even from here, you can say you've completed 2019 as a winner. So looking at this now, Bakkt is tomorrow, and we saw that huge bullish candle around $10,000 just 3 days ago. This would have enticed many people to believe this could be a huge long opportunity just before the Bakkt launch, and many people would have believed this could have been the institutional capital gearing up to break price to the upside. Now, the same way CME futures, when it went live, BTC was at all-time highs. Market manipulators and institutions and anyone that has a substantial, predominant control over the market, they understand highs and lows, they understand supply and demand. They understand that buying price at the best value is always the greatest way to make money. Now, these people, they understand they have the ability to drive the price to any price they want. They can literally, if they really wanted to, they could drop BTC to $200 in a heartbeat and then buy it from there if they really wanted to. We have to remember this is a huge, almost a gang or a cult-like behavior and a huge criminal organization to some extent, where again the BTC hashing power, over 60% of that is just controlled in China alone. Alongside this, they're working with the likes of Binance, they're working with the likes of Coinbase. There are all kinds of different farming pools and mining farms, for example. They're all working together as a collective and they're driving price through insider trading. It's been exposed actually, I think almost 4 or 5 times now over the past 2-3 years. So we've understood how the market moves, and now that we've understood this, we can start to look at this a bit more logically and understand that BTC right now at $10,000, we're about to have a huge influx of new traders joining the market. Bakkt will provide a huge liquidity boost to the market, but these traders have missed arguably the predominant movement of 2019. Even if they were involved, they haven't been involved in the futures aspect, because if they're joining Bakkt, it's very likely they haven't been using CME futures yet. As you understand, if someone is using CME futures, they would have no real reason to be using the Bakkt facilities or platform if they're already well hedged within futures contracts with the CME side of things. Again, the Chicago Mercantile Exchange, it's the same as using a broker. Let's just say you're using a broker and you've been using a broker for years and years and years, or even weeks or months or days, however long it is, and then a new broker comes out promising the exact same features. Why would you as an individual completely remove all of the infrastructure you've put into place to use that platform to go and switch over to another one that has the same facilities, give or take a few differences here or there. So when you think of it in that way, you understand it's fresh capital coming into the market and fresh capital that haven't been trading futures before. This means they've probably missed out on a lot of movement. So my theory here is with Bakkt coming tomorrow, even if we do not see any too much of a significant drop, it could follow from next week onwards. Once these people have deposited money, they've deposited their BTC, whatever it is they will be doing to get their funds in, it could take a few days. So understanding all of these contracts as well and how it works, and understanding that we have still broken from a key resistance level. We broke that trend line around September the 2nd, I believe it was. We then rejected. And if you look from a weekly perspective on the daily, for example, as well, and combine all of these factors together, we could easily be seeing at least $9,300 to $9,200, which is our first profit taking target. Although the trade's running around 800 pips in profit, it doesn't mean we close out just yet. We simply keep our stop losses above around $10,600 to protect ourselves, and then we await the further downside movement. From a short-term perspective as well, we could even see a short-term, very short-term, and even an intraday upside breakout. I literally mean a short-term drive up to around $10,800 just to trick people into potentially going long. Even if we saw a movement like that, it would still mean that the BTC daily candle closing price could still end up back around the $9,000 region. So we need to exercise caution. Stop losses need to be in place because a lot of manic behavior could be occurring over the past few weeks. Now, we could have absolutely no movement at all and the market remains the same. But with so much capital potentially being driven into the market from next week onwards, we need to understand and be prepared for what could be a very manic week ahead. Understanding all of these key levels as well, especially from a weekly perspective, as I've covered on Twitter and on the Telegram, you need to be zooming out and looking at the chart properly. We've broken through $11,000 on the weekly, we came back up, we rejected that level, and now we are still forming lower lows and lower highs. There's a broken trend line and a very strong trend line as well, which I'll be showing you in the video later, that could arguably add up every single bit of analysis. So with this broken trend line, the main focus still remains at $8,400 to $8,500 as the overall main target. That's the only target in goal for now. And once we fulfill that target, anything else is a bonus. But I do believe the CME futures gap, there's been a lot of gaps left on the market now, which has caused more confusion than good. And as I've covered in a prior podcast, these gaps that are left behind on the CME futures chart, something that I'll actually be showing you within the Wizard platform, how to understand and read to use to your advantage. This is one of the ways early on in the year, how I managed to capture so many movements when many people didn't understand how I was doing so. And there's many different tips and tricks to actually understanding the CME futures charts and understanding the contract closing dates, for example, but that's all covered in the Wizard platform. So understanding this and understanding there's been a very large gap around $8,400 for several months now, the Bakkt futures traders could be able to drive the price. This could be their goal. With an open gap, it's essentially a target. The same way I give you guys profit-taking targets, this could be a crucial region for the Bakkt traders to drive price down, even an extra $2,000, $3,000 to at least capitalize even more. At the end of the day, if you're an institution, why would you be buying BTC at $14,000? Why would you be buying BTC at $20,000? And why would you even be buying BTC at $10,000 when you know there's a gap for CME futures at $8,400 to $500? It may not seem like a lot, but when you are trading the sheer capital size these institutions are trading, even a $300, $400 movement in BTC can make you millions. So you have to understand, if these people can drive price an extra, or entities, not even people, these entities, this collective of individuals with a lot of power, if you're able to drive price an extra $2,000, $3,000 lower, you are able to make tens to hundreds of millions of dollars in a matter of seconds, simply with the capital you have allocated to manipulate the market. So a lot of this is really adding up to me right now. And the main question is, how do we prepare for this short term? And how do we prepare for this long term? Now, on a short-term perspective, first of all, if you're trading, as I said, stop losses should be implemented. This could be an amazing double trade opportunity coming up. Now that we've broken this $10,000 level, although the candles haven't really seen much downside movement yet, if we do see a short-term drop, let's just say we drop down to $9,300, $9,200, and then we plummet down to $8,500 to $8,000. This is where we would immediately be taking off 70 to 90% of our profits, and we would be leaving 10% overall 10 to 20% realistically to run. We would drop our stop losses down to around $9,300 because if price does break $9,300, then we will very likely be seeing a retest. If it doesn't happen too fast, then let's just say we only peak around $8,500, $8,400. A retest around $9,300 would be incredibly likely, and that could even drag us down to that $7,600 region. But overall, you need to prepare short term for a potential downside movement. It's not really a good idea to be on either side of the market right now, but because you have entered at the absolute peak of the movement around $10,800, you've actually managed to capture a very profitable movement from the market. Executing any trades around this current region is incredibly dangerous, and I would not advise anyone to be involved in the market, especially before such a potential huge fundamental impact could be occurring on the market. From a short-term perspective as well, if we do see this drive down and you do leave that little bit of profit running on the table, you can start to either hedge in your trades. For example, from $8,000, you can start to go long. You can leave the short positions running whilst entering long positions, very small positions from $8,000. From there, if you do start dipping to $7,000 or $6,000, you can just slowly add a few more margin buys. And then from here, we are pretty much almost guaranteed, not guaranteed, but we are very high possibility of reversing and being a catalyst for a 2019 remainder of the year rally towards $11,000. And if not, shifting into 2020, there could be some phenomenal growth. And I do believe with the BTC halving, the hash rate increasing, and the halving moving forward a month earlier than expected, there should be some phenomenal growth being seen next year. So a best way to capitalize off that is capture the short and capture the long if it comes through. If price does break to the upside, you've still made a profit from the trade. The price will come back down as it always does, and then we can capture the rest of the bullish momentum for the remainder of 2019. But here's the biggest misconception many people argue. No matter what trades I'm giving on a margin basis perspective for intraday, or even swing trading, when it comes to long-term holding, physical BTC, XRP, Ether, these prices, guys, obviously BTC has seen a bit more phenomenal growth, and I'm not a big fan of actually holding and investing in BTC purely because of how expensive the price is right now. Even if it is $10,000, and even if it could easily go another 100% to $20,000. The overall percentage and the overall return on investment is very minuscule in comparison to the likes of altcoins like Ether or XRP. Again, I only say those ones because I'm actually holding them. And of course, you've got the others like GNT and Syscoin, which I will be providing in a market breakdown as well, because many of these altcoins right now, especially the ones like Syscoin and GNT, they're looking like they're going to be breaking out to the upside very soon. So this is something we need to be prepared for. And from a long-term perspective, this is where you should begin to start buying your altcoins yet again. If not, you should have been buying throughout the majority of the past 2 months anyway, because disregarding any of this movement we're capturing up and down, from a longer term perspective, guys, these prices right now where we're at, this is where you should be buying and observing and understanding we've seen phenomenal movement already, and where prices right now is absolutely nothing compared to where it could be in a year's time, 2 years time, and even a decade's time. We have to remember cryptocurrencies, alongside being able to actually capture these phenomenal intraday movements, this is a long-term investment. This is a long-term market. You've entered at the infancy stage, which means it's in your best interest to be holding these coins from a very low price and not even caring what price it's at right now. One thing I was doing back in the early days, I was actually putting all of my wages every single month into the market. I was dollar cost averaging every month, cutting down my expenses and pretty much investing everything I physically could into the market at these low prices. And you're looking at these prices now, XRP is looking like, especially from a weekly perspective, it could absolutely blow through the roof if we see this level sustain. After seeing that 32 cents push and the push back down, for me, this is a pretty clear warning sign. It could be following up with even more upside movement. If you consider back to the, let's just say 2018, August, around even August, September, price was at 30 cents. And when price jumped from 30 cents up to around 80 cents, everyone was in panic. There was a frantic on social media. People were almost begging. People would have killed to have seen the 30 to 20 cents region again. And here we are back below that region once again. We're sitting at 27 cents right now. This is arguably one of the greatest prices we've seen since 2017. We haven't actually been this low since 2017. And the last time we were actually at this region was was around the 27th of November 2017. So when you put that into perspective, it's taken 2 years to come back down to this level, exactly the level where we were breaking out from to cause the next bull run. You've essentially been given a second chance in the market. If you've missed out and you bought at all-time highs, it makes perfect sense to be dollar cost averaging around these regions to actually prepare yourself for a very large future movement in the market. Everything right now is really starting to make perfect sense, and I do believe if BTC does actually plummet, then not only will the dominance drop, but the altcoins right now are looking pretty ripe to actually continue a further upside bias. So from a longer term perspective, you should also be understanding that if you are buying at these current regions and price does go towards the upside and it absolutely rockets and we see a bullish breakout, this is actually beneficial for you, because if you're entering margin trade shorts and they get wiped out, then your long-term portfolio and your actual physical cryptocurrencies will be gaining value and counteracting any losses anyway. One of the best things I've always done and always understood is, as long as I have a secure portfolio held within the market of physical cryptocurrency, what happens to my actual margin trades isn't too significant. That is bonus money that you can actually use to leverage and reinvest more capital into the market. Let's say you have 3 or 4 winning trades and you've made a significant growth on your account. You can allocate this capital to actually add more crypto to your portfolio. Let's just say you shorted XRP at 50 cents where I recommended to do so, and you made a killing as it rode all the way down to 27 cents. Your portfolio has now dropped in value, but your margin trades have still profited from a falling market. You can then take this capital, allocate it into XRP cheaper, and you've now made XRP even when the market's falling. So just to kind of summarize overall, right now, guys, there's a lot of crazy activity potentially coming forward. As you can see, the SEC, they're starting to actually take even further interest. We've got Santander pushing forward, JP Morgan, Wells Fargo. A lot of big steps are happening in the market right now, and we have not seen this much institutional interest, this much adoption, and of course, the futures are now starting to go live. Now that the regulatory approval has been given for Bakkt as well, and Bakkt is about to launch, this is a very crucial telltale sign that big things are coming. So no matter what the margin trades are doing, you should be heavily hedged and well invested in physical crypto as well. I'm going to leave you on that note, and I need you guys to understand there are big things coming. There's going to be a huge amount of movement following over the next few months. And even if crypto falls lower, you need to be focusing on that 2 to 5 year perspective at the bare minimum. If you've understood that XRP has hit $3.3, Ether went up to $1,600, and BTC went up to $20,000. If price can do that in 2017 where there's no institutional capital and it was purely speculation alone, then imagine what will happen in a matter of years when the full institutional capital is there. We have hundreds of potential futures platforms going live. We have institutions adopting the actual market. We have institutions adopting the technology. We have institutions exchanging using fiat to crypto back and forth. They are utilizing the technology. When you have a full global real world use, it will be too late to invest. It's during these exact moments in the market that millionaires are made.